Alright, so in this video, I want to go over my risk management guidelines, basically the rules that I follow when I'm trading. And these rules basically determine how much I risk per trade, the types of trades that I take, how I manage my trades afterwards, how much I am willing to lose in a day of trading before I cut myself off. And overall, these rules have been greatly beneficial to my trading. In fact, for me, it is a necessity to follow these rules because without them, I have never been profitable trading. I have really only been able to grow an account when I have been following these rules strictly. And so I'm going to be going over how I go about managing my risk when trading. So the first thing that I consider whenever I'm looking to take a trade is what is my invalidation point and how much am I going to risk if my invalidation point is hit. And for most trades I take, probably like 95% of them, I am risking between 0.5% to 1% of my total trading margin, which is basically just all the margin I have spread across the multiple trading accounts that I have. And so if I'm trading with $100 across multiple accounts, then for every trade I'm risking between 50 cents and $1. And the reason I risk such a small percentage of my trading balance for every trade is because I am an active trader. I usually take multiple trades per day, on a good trading day. And I'm usually trading pretty small time frames. For me, I've found that it is a necessity to make sure that I'm sticking to this, risk management rule of risking a very small amount of my trading capital per trade. And despite that, I still can make, very good percentage gains on my account when I have a winning trade. For example, if you took this SFP here, let's say, your invalidation was right up there, maybe you entered somewhere down here. And if my stop loss, which is a 0.36% move, would lose me 1% of my account if I did the math right, which, by the way, I keep a spreadsheet, basically, a cheat sheet, to kind of tell me approximately how much I need to put on each trade, depending on leverage and depending on the stop loss percentage. So I know some people have formulas to figure out exactly how much to put on each trade. I don't do that, so I'm usually risking, approximately 1% or 0.5% if I'm going with less risk, but it's not exact, but I do risk approximately 0.5 to 1% per trade. And with this one, just trading it down to the lows of this range, which, granted this wasn't a range when we took the trade, but, just riding this down to previous resistance that we had right here, could have netted you 2.5% on your account if your stop loss was 1%. Because, the gain, the 0.9% move that you got to the downside is 2.5 times greater than your stop loss. And you guys know the way I like to trade, I would probably TP some here. I maybe would have TP'd, honestly, some a little earlier. But I like to TP earlier, de-risk my trade. Maybe I'll leave my stop loss at the invalidation. Maybe I'll put my stop loss at entry. But I am basically taking profits out along the way. And then if the trade ends up running, then maybe I can net, a little bit more on my account. And that same rule applies if I'm trading higher time frames. Like, let's say, I traded this down here, which this actually was a trade I took. There was a 3-hour order block here that I did long once we kind of got up above the value area low. And my, stop loss for this was much greater than for my last trade. It was 1.4% or so. But still, doing the math right, I was still risking 1% or approximately 1% with this trade. And obviously that means I had to put a lot less margin on this trade. But still, with a target of, the value area high or around the highs of the range, this was still a good risk reward setup. Not the best, it netted me 2.5% up to the value area high. Not a bad trade setup still. So yeah, essentially, I make sure that no matter what my stop loss is percentage-wise, I'm still risking approximately the same amount per trade. At most, I will risk 2% to 3% of my trading balance for a very confident trade. Now, this hasn't happened in a while. I haven't had a trade that I was willing to put 3% on in a while. I think I may have taken some 2% trades, definitely some like 1.5% trades where I took a little bit more risk because I was a little bit more confident in it. But, at most, I will risk 2% to maybe 3% on a very confident trade. And another rule that I have that has been very important for me is, if I lose more than 3% to max 5% of my trading balance in one day, then I am done trading for that day. I am cutting myself off, and I'll come back to the charts tomorrow. And this has been a very important one for me because some of the biggest losses I've taken in a day have come from a string of bad trades, often caused by, one loss that then, made me want to revenge trade or take a trade that I wouldn't have taken otherwise. And, that ultimately leads to more losses. And luckily, I haven't had to cut myself off from trading in a very long time, probably at least a few months. But when inevitably there comes a day when I take, some losses, 3% to 5% of my account, then, I have to follow this rule. I have to cut myself off for the day and come back to the charts when I'm in the right mindset to trade. So those are the basic risk management rules that I follow. Now, to add on to that, I would say that just following these risk management rules is not enough. You can risk 0.5 to 1% on every trade and still take 10 bad trades in a row and lose like 5% to 10% on your total trading balance. So to go along with those risk management rules, I follow strict rules when it comes to the types of trades I take, the strategies that I use, and to put it simply, it means that I only take trades with strategies that give me clear invalidations. And this is something I talked about in a video a few weeks ago, was, trading with strategies that give you clear invalidations. And for most of my trades, I only trade with strategies that give me very clear invalidations. If I'm taking a trade that maybe has a less clear invalidation, then I'm still going to use an invalidation that makes sense. So for example, let's say for some reason I wanted to take a swing long on Bitcoin right now in the middle of its range, which I wouldn't do, but hypothetically, then I would need to find an invalidation that makes sense. So you could say that, the value area low might be that invalidation if you're not expecting price to come down below the value area low. If you're expecting a move up, maybe towards the value area high or a breakout, then maybe the value area low makes sense for an invalidation. Obviously, the better trade setup that you get, the better your invalidation would be. So I would probably never take a trade like that. If I was going to long Bitcoin right now in the middle of its range, then I would want a lower time frame setup that gives me a tighter invalidation. I would like some reason to think that this was a swing low, and so I could put my invalidation down below there. But I do like to trade with strategies that give me very clear invalidations, such as an SFP, with the invalidation being above the high, such as absorption, which I think we got some bearish absorption earlier. So let me see if I can find that example. So yeah, right here, we saw CBD increasing with open interest increasing as price put in a lower high. So that is bearish absorption. And this also gives you a clear invalidation. If you entered over here, you could have had a tight invalidation, which would be this high back here, because this is the high where we started forming the absorption. So I prefer to use strategies that not only give me clear invalidations, but give me a tight invalidation, that give me clear confirmations. If I don't have clear confirmations, then I'm not going to be confident to take the trade. And the confirmations that I look for are mainly market cipher, order flow, and also price action. So like market structure and also the reaction that price has at a level. Those are all things that I take into consideration when I'm thinking about taking a trade. There are some other confirmations that I use sometimes. There are many others that other people use, but for me, those are the confirmations that I look for. And without clear confirmations, there is no trade to take, in my opinion. Another thing that I must have in mind whenever I take a trade is my take profits. What are my take profits going to be? How am I going to de-risk this trade? And does this trade make sense in terms of risk reward? And so, again, going back to this example, because this was a great example here, we had all of those things that I was looking for. Had a strategy that gave us a clear invalidation, which was the SFP of this high, invalidation above the wick. We had clear confirmations with these 6-minute divergences in momentum and money flow. We can also check Coinalyze, and there was a decrease of open interest at that wick. Some trades getting stopped out. It was not a massive decrease of open interest. Most of the trades getting stopped out actually came earlier, but you still could have looked at this decrease in open interest as a little bit more confirmation. And looking at price action, well, you can see we obviously got a nice reaction from that level. We got a very quick wick to the downside. Price closed below that high that we SFP'd. So we essentially got all the confirmations and all the reasons to take that trade that I could ask for. And so this is a very key part to my risk management strategy as well, is, not just risking a small amount per trade, but only taking trades that I think will play out. Again, you can follow good risk management strategies in terms of risking a set amount per trade and being comfortable with that. But if you're only taking bad trades and, only sometimes getting winners, then your risk management isn't really going to matter. Now, another important thing when it comes to risk management is how I manage my trades once I enter them. Now, I like to take profits on my trades quickly. So whenever I enter a trade, there are two things I do immediately. I set my stop loss and I set my first TP. And usually once my first TP gets hit, I have another decision to make. Am I going to put my stop loss to my entry and basically ensure those profits that I just locked in, lock in a profit for the trade? Or am I going to leave my stop loss at the invalidation for the trade and maintain some risk, risk the profits that I just took out, maybe ensure a break even? But, at the very least, you are de-risking from the trade. And, in my opinion, a lot of times that is worth it if you have a good trade setup that you think will continue to play out and that, you think has not fully run its course yet. This would have been a great example, which actually I did take this trade. And I did hit TP1 down here. And I did maintain risk with this. I kept my stop loss above my invalidation. But what happened here? Well, once we got this move to the downside to hit my TP2, that is when I decided to put my stop loss at my entry. And what happened after that? Well, price came up to stop out my trade before getting a massive move to the downside. Deciding how to manage your trade is another important skill to develop. And really, in my opinion, it comes down to just making the best decision that you can. And so, for me, after TP1, the best decision that, in my opinion, I could make was leave my stop loss at my invalidation. I thought this SFP may continue to play out, and I had de-risked my trade. I had ensured a break even, maybe a small loss, but I was still holding my position. I basically had a risk-free trade right here by, locking in some profits. But once price came down to hit my TP2, I decided that it would be more worth it to move my stop loss to entry and lock in those profits. Now, in hindsight, I wish I left my stop loss above this invalidation because, we got a quick liquidity grab of all those shorts before we got the actual move to the downside. But there's no way that I could have known that during the time, and so I made a decision that made sense to me. And this was still a winning trade. I still locked in a profit with this one. So even though in hindsight it wasn't the best decision, it was a decision that made sense, and it's probably a decision I would make again in similar circumstances. I usually like to lock in my trades after TP2, after I've secured a certain amount in profits, and it was a decision that made sense. So, okay, we just hit the untapped daily, and we are seeing people shorting the bottom, if it's going to be a bottom. We got some divergences here. Money flow does not look great. Money flow does not look great on the 1 minute. So I don't think I have a trade here. 6 minute money flow looking to put in a lower low here. Yeah, not looking super great, even though we are seeing divergences. Seems like price might want to go lower. So yeah, back to this. There is no, one way that I manage every trade. Each trade is different, but the way that I try to TP and the way I try to de-risk as soon as possible usually stays pretty much the same. For example, let's say I took this trade. My, number one invalidation would be below this wick, which did we front run that daily ever so slightly? We did. So let's say I hypothetically took this trade. My first TP would probably be up at these highs. We just SFP'd these lows, meaning that there's a decent chance we come up for these highs. This is a TP that makes sense. It is a 1.8 risk reward, which isn't the best, but still this is the first logical TP for me. So if I took this trade, this would probably be how I would manage it. And, depending on the strength of the move to the upside, if we see a, clean break of this structure and then we start coming back for a retest, I might put my stop loss below the 886 if I'm expecting a higher low into the golden pocket 786 area. Then I may still maintain a little bit of a risk with this, maybe ensure a break even by putting my stop loss below the 886 and still trying to stay in this position. And maybe closing my position if price starts coming down to the golden pocket and we're not seeing the signs that I would like. If I think that there's a good chance we come down to hit my stop loss, I may try to lock in those profits anyway. But again, each trade is different. The way that I manage the trades depends on what I'm seeing in real time. But in general, the way I set my invalidations and the way I set my TPs and the way that I try to de-risk my trade quickly remains pretty much the same. And now I want to go over some extra little rules that I have. Number one, I only like to re-enter a trade after a loss if I planned for that scenario. So for example, if I took a small risk on the first trade because I thought there was a good chance that we might come back down for the lows, this is actually a decent example right here. Let's say I took this trade, but since we front ran the untapped daily, I think there's still a good chance we come down for the lows. We sweep that low one more time. Maybe we SFP it and get another move to the upside. Maybe we just lose the level. But because I think that there is a chance we come back down for this low, because I'm not, 100% confident in it, also taking into consideration the things I'm seeing on Market Cypher, which actually this 3 minute is looking a little bit more bullish now. But money flow decreasing on a lot of time frames, 1 minute money flow getting lower, 6 minute money flow not looking the best. If I did take this trade, I probably would have taken like a 0.5% risk on it rather than a 1% risk on it because I'm a little less confident in it. And let's say price, maybe comes up a little bit, comes down to sweep the lows one more time, stops out my trade, and then SFPs one more time, but we're seeing better confirmations on that low. Then in this scenario, I would probably be willing to take another trade, take another 0.5% risk, because I basically planned for this scenario. So yeah, that is another little rule I like to follow, is I don't like to just re-enter if I get stopped out, unless I actually planned for the scenario. But sometimes I will admit I do take trades after I get stopped out, even when I didn't plan for the scenario, just because the confirmations that we saw on the last low were so good. And another, very simple one is do not revenge trade. If you want to take a trade because you just took a loss, then you want to take a trade for the wrong reasons. You should only want to take a trade because you had a plan for that trade and because the criteria for the strategy of that plan were met. Those are really the only reasons that you should take a trade. So for me, I would say I never take a trade simply because I just took a loss, and that basically goes hand in hand with this. If I'm going to take a trade after I take a loss, it's going to be because I think that is a good trade setup and because the criteria for a strategy that I have were met. If my criteria is not met and I'm taking a trade after I took a loss, then I am revenge trading. I'm trying to get that loss back, and in my experience, that only leads to more losses. Alright, well, this video is running long, so I'm going to cut it off here. But yeah, that is basically the risk management rules that I follow summed up. I don't think I forgot anything. And these are rules that I am still developing. I may add other rules to this. I may change some things in the future. But in general, these are the risk management guidelines that I stick to. And I have noticed that they have been greatly beneficial to my trading.